So welcome everybody. Welcome to the Texas REIAs. The Texas REIAs is the largest market of real estate investors, a largest association network of real estate investor associations and real estate investors in the great state of Texas. Over 150,000 members, participants, and attendees going back to 2003. So we do all kinds of resources for Texas real estate investing, training, market updates. We're about to do a market update. We have 257 vendors. We have 1,000 private money lenders. We have 25,000 buyers, and so on. So I'm going to take a few minutes to do a little market update and talk about what's going on in the market right now. So people always ask me, well, can you just summarize it all? Well, this is kind of a summary chart. The average price house in the great state of Texas right now is $427,000, up 3% over 1 year ago, up a little. The median price house in Texas, $340,000, up 1% over a year ago, up a little. But if you wanted to look at just one number that really tells you more than any other number what's going on in the marketplace, it would be this number right here in the middle, months of inventory. What is months of inventory? The way this is calculated is like this. If you took all the houses for sale in the MLS, took all the houses that are in the MLS for sale, and you stopped adding any more to the MLS. So we're going to just sell what we got until we're out. How long would it last? And the answer, 4.8 months, which is also the average amount of time it takes to sell one house. Now, average, right? Some houses sell much faster, some take much longer. That's why they call it average. That's the average, 4.8 months. Now, let me put that into perspective. The saying is, if there's less than 6 months of inventory, you're in a seller's market. If there's more than 6 months of inventory, you're in a buyer's market. If there's right around 6 months of inventory, you're in a neutral market. So what market are we in? We're in a seller's market. Now, a year ago, we had 3.6 months of inventory, and we were in a hot seller's market. Now we're in a lukewarm seller's market. But we've never gone for years back to the buyer's market. And there's some reasons why this is the case in Texas. So let's look at the history. 2021, prices of houses in Texas went up 18% in 1 year. 2022, they went up another 10.7% in 1 year. And then 2023, they flattened out. 2024, flat. Until at the end of 24, they came up a little bit. Why did they come up a little bit? What happened at the end of 2024 to interest rates? They came down a little. When interest rates came down a little, prices went up a little. Why didn't it correct? Well, let's talk about that. What affects prices? Do interest rates affect prices? What do you think? Yes or no? They do, but not as much as you think, right? Real estate prices, they care about two things, supply and demand, okay? Now, when interest rates go up, houses are less affordable. Fewer people can afford them, demand goes down. When demand goes down, that pushes prices down. But there's an offset. What's the offset? Normally, 2/3 of houses that are sold on the MLS are resale, 1/3 are new construction. Right now it's inverted. Why is it inverted? How come nobody's selling their house? Why do you think? Interest rates. Because they all got the 3% mortgage and they don't want to give it up. Right now, people should be saying, hey, honey, time to buy a bigger, nicer house. But they're not. Instead, they're saying, we got a 3% mortgage and we don't want a 6.5%, 7% mortgage. Let's stay where we are. Right? So all that inventory is being taken off the market. So yes, there are less buyers, but there's also less sellers. And when you have less buyers and you have less sellers, sellers are pushing up, buyers are pushing down, what happens to prices? Flat. In fact, we have a lot of other things going on in Texas. Migration. What is migration? The ratio of people moving in versus people moving out. Last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? And then there's another 10 million, we don't know where they went, okay, but a bunch of them are here too. And they all need a place to live. And it's either going to be a house or it's going to be an apartment. And the apartment buildings are pretty full and the houses are all sold. In fact, nationally, did you know we're in the middle of a housing shortage? Who's heard of this? 4.8 million fewer houses than we need for everybody that needs to live somewhere. And when you have a housing shortage that's for all kinds of reasons, what does that do to prices? Up. Why did they raise interest rates? To battle what? Inflation. What's another word for inflation? You know, whenever they talk about inflation, they always talk about it like in these negative terms. Inflation is bad. We have to whip inflation, stop inflation. Now, personally, I disagree. I'm going to tell you something about me. I love inflation. I adore inflation. I just have another name for it. You know what I call it? I call it appreciation. It's the same thing. Anybody own a house for the last 3 years? Raise your hand if you had a house for the last year. Oh, congratulations. You're a lot richer than you were before because of appreciation. It's the same thing. When there's inflation, money becomes worth less. Because what? Because everything else becomes worth more. Where do you want your wealth when there's inflation? Physical stuff, things like real estate, things like gold, right? So if you're somebody like me that owns a lot of real estate, you go to bed at night hoping for more inflation because we just call it appreciation. So yeah, right? There's things pushing down, there's things pushing up, and they offset each other. So, tell you a little data. I'll do a city. Houston, here we are. The average price house in Houston looks a lot like Texas. Average price house, $427, up 3.7% over a year ago. Median price house in Houston, $335, up 1.5%. Months of inventory, 4.6, very similar to the state. Lease listings are up. Lease prices are up a little bit. Now, when leases are up, multifamily, commercial, when the lease prices are up a little, what does that mean? Are the apartment buildings full, the apartment buildings empty? They're full. When they're empty, the prices go down. When they're full, the prices go up, right? Houston, 2021, prices went up 16%, 2022 up 10%, 2023 flat. And then 2024 flat and went up a little bit at the end of the year. And that's basically where we are now. Okay, so what's driving the market? The economy. Economy's not doing bad. Consumer confidence is kind of meh, not bad, not good. Unemployment is pretty good here in Texas. We're full employment. Job growth, pretty good here in Texas. Stock market is doing great. Lately, it's not so great, but it's kind of eh. Business growth cycle. You know, and by the way, the stock market doesn't affect real estate directly, other than when people see that their 401k has money in it, they're like, oh, you know, they feel wealthier and they're a little more likely to buy real estate. Business growth, great in Texas. So the economy is overall medium to good. Affordability, interest rates, they went up. That's pushing prices down. There's a red one, right? House price trajectory, flat. Not up, not down, flat. Up a little bit, we'll call it flat. So red pushes down, green pushes up, and yellow is flat. Housing supply, active listings flat. Months of inventory, we're still in a seller's market. Housing permit trajectory, we got a problem. We're not building enough houses. People need a place to live, and we're not keeping up for a lot of reasons. And construction labor growth, another big problem. We got a major problem. Contractors are dying off. The average general contractor is 58 years old. They keep getting older. They're not getting replaced. So I got news. If you got a teenager, don't send them to college. Buy them a hammer. Okay? Yeah, buy them a hammer. All right? You know, you go to college, they're going to spend 4 years accumulating student debt, you know, graduate, maybe get some crappy job making $65,000 a year working for somebody they don't like. Or you can give them a hammer. Right? I know plumbers that right now are pulling down $1 million a year. Plumbers are getting paid like surgeons, guys, right? No student debt, make money right away, don't have to work for a jerk, right? Take off whenever you want. I mean, it's a better life. I'm just saying, I went to college. My parents went to college. Now I'm a dad. I got a 16-year-old boy. And I'm telling him if he wants to go to college, he can go to college, but he's not required to go to college, because I think there's plenty of things you can do other than college, right? And maybe keep him more money. And then housing demand, closed sales trajectory flat, pending sales trajectory flat. Migration is the big one, though. That's, again, the ratio of people moving in versus people moving out. Everybody is moving to Texas. We're not building enough houses. We don't have enough houses. We don't have enough apartment buildings. They got to live somewhere, right? We got a housing shortage. And until that is corrected, which will probably never happen, that's pushing prices up. And then I guess there's some wild cards, interest rates, who knows, got a new president, there's tariffs, immigration, all kinds of stuff going on. So I don't know, what do you think, guys? Let's do a little poll of the audience. And there's no right or wrong, it's just your opinion. Based on your opinion, who thinks prices are probably going to go up a little this year? Who thinks prices are probably going to go up a little this year? Who thinks prices are probably going to go down a little this year? Down a little this year. Okay, this is your opinion. I'll give you our forecast. And by the way, all of this, I don't create this, it's just reporting it. This is from the Texas A&M School of Real Estate, a bunch of online resources. We don't have some agenda to try to convince you it's going up, down, or sideways. We can make money in up markets and down markets and sideways markets, but you have to be a student of the market because you want to know where it is. So I will give you a forecast. So our forecast is that was the bottom. I hope you enjoyed it because there wasn't much to it. Interest rates are probably going to go down a little bit this year. How much, we don't know. This will probably cause a little bit, but not much, of an upward juicing of the market. We expect that prices will go up about 2% this year, and sales volume will probably go up about 2% in this year. There's just not a lot that's going to push it a lot one way or the other. So that is our forecast.